morning, traders. Hope you all doing fine. Welcome back on a new YouTube video, educational video. It's a little while that I was on YouTube, but I'm back again with a nice and powerful video. A percentage of risk. In this video, I'm gonna take you with me with a great explanation on risk to reward and risk management, money management, a very important aspect if you're a trader, okay? And it is using by most of the traders totally wrong, okay? Because they want to earn big money. Gonna start off with a small account, which is fine, but calculate your risk, okay? It's a very important habit of a trader, and it doesn't have to become a bad habit, okay? Because a percentage of risk, you're gonna risk a little bit to aim more, okay? So for example, you're risking 1% to aim for 2 or 3%. Means you have a risk to reward of 1 to 2, 1 to 3, okay? The most important lesson in this is calculate your ranges, calculate your stops, calculate your take profits before you're gonna enter any trade, okay? Do you have the room to aim for the 3R, for example, or 2R? Is the range there? And stuff like that, okay? So important to understand, use a proper risk management. I'm gonna give you a couple of examples, okay? For example, you have an 5,000 euro or dollar account, okay? And you want to risk a 0.5% or 1% or 2%, do the math, okay? A percentage of 5,000 euros / dollars is 50 euros, okay? Everyone can calculate that, okay? So you have the power right now to risk 50 euros equal on 1% of your total account balance to aim for at least, for example, you're using 2R, okay? 100 in return, okay? So you aim for 2% and you're risking 1%, okay? If you aiming for a better reward, you could go for 3R on the 50, return 3%, okay? So for example, your first trade is a winner, okay? You are risking 1% of the total account balance. It was a winner and you had that 2 or 3R, for example. So that means if you lose after this trade another trade, your offer was still a winner because you have still $100 in your pocket, okay? So that means a little tiny percentage of your account at risk for a greater reward, okay? Risk to reward. It's so super important, and most beginners start trading, newbies are using this totally wrong, okay? They're gonna start off with a $500 account and risking half of the account, 250 euro or dollar, and you can imagine nobody will be 100% a winner in this industry, okay? It doesn't exist. There is not a 100% win rate. We are risk managers, and you know, it's super important to using a proper risk management, okay? So no full margin trading, not risking 50% of your accounts. You want to be in here for the long run, okay? You have to see trading as a business. And if you ask me, you need to use some proper risk management. If you want to keep a healthy account where you can build on, compound on, stuff like that, okay? So 5,000 euro, you're aiming for 3R means 3% in return is 150 euros / dollar in return for only one trade, okay? And you have only risked 50 euros to get that return of 150. which is lovely. Okay, you can imagine if the amounts are bigger. For example, you have 100,000. 100,000. 1% is 1,000, so you can risk 1,000 euros/dollar, and your account is still not in danger. Okay, I know traders that even using 0.5% of their total account balance. I know traders that using 0.2, 0.3. I also know traders that using 2.5%, 3% on an account. It's possible, except the amount you can lose. Okay, so percentage wise, I think it's super important to use this rule. Okay, because yeah, you have to see the account as a business, and before entering any trade, you really need to understand those price ranges as well. Okay, for example, I'm gonna put in a couple of lines. In identifying S&D level, supply and demand, because I trade mainly supply and demand area, combined with retail support and resistance levels, to see that nice manipulation within these levels. Okay, for example, I have added a level right here, and you can see that nice spikes within this level. Okay, spikes in this level, and you can see that nice manipulation. So you can imagine, because you can see that gold is overall was overall downtrending right here. You can see the price is moving to the downside more, and that a lot of retail traders have entering a short around this edge. Okay, around this edge right here, and have taken a short right here because they thought it's now downtrend, we're gonna sell. Okay, and right here you see the same sort of scenario happen. I'm not gonna go too deep in this, but this is an idea. This is an idea, and this is how you can use it around these edges. So if you're taking a short right here, you're totally wrong. Okay, because make no sense. But most traders in my community have entering more than likely along within this situation. But then it's also important again to calculate those levels, okay, and your targets, your levels. Where can price push through? What is the ID? What ranges do we have, and what I'm gonna risk? For example, you can see this is an 100 pip range right here. The first range is 100 pip. And the second range where price is also pushed through, we can identifying a level right here. Okay, this is a valid supply level. Okay, and you can see we spike it within this level, and price decide to reject it and push to the downside for more than likely a nice retracement or anything like that. So that is what we see, and we have also a 100 pip range right here. So these are 200 pip ranges. Okay, so that is the range you have and the range you understand where your maximum targets can be in. Moving to the lower time frames, more than likely you're going to see this spikes as well, nice manipulation moves within this range, and from here, okay, you're gonna calculate those stops. Okay, we know we have the 100 pip range, and we want to risk a percentage of 2% of our account to aim for 2 or 3 or 4, 5%, 6%. So I'm going to show you that. For example, we have this right here. So we saw that manipulation move. We saw a couple of tests right here within this level, and you want to calculate those risks. Okay, so for example, you have entry right here. You put your stops below strictly, for example. Okay, right here, and you enter right here. You have a maximum target till this level. Okay, the 1868 level as a maximum target. So that is the range we have. And you can see price spiked in it, rejected a couple of times. So if you're entering right here and your stops right below structure, you're still having a risk to reward from greater to, I think, 5R, 4, 5, 6R. It's possible, okay? So first of all, you always calculate your ranges, okay? That is so super important to understand where can price push through, okay? Super important. You can also see price spike it in this level and start to reject a couple of times. So there is no need, if you scalp, to let the price turns each time almost to your entry point, okay? So if you enter right here, your first take profit point, was simply here, okay? TP point, your first TP point. And you can see right here, each time price turns back to this base, okay? And if you was waiting to hope that price will push through, it did. It definitely did. But yeah, there is no need for that. So you calculate your range, you have a 100 pip range, you're risking 1% and you're going for 5R, okay? Calculate this in pips as well, but most important thing is the percentages, okay? So you can calculate pip-wise the percentages. So if you risking, for example, you have $1,000/euro and you only want to use a 50 euro of stop loss, you can you more than likely somewhere between 0.05, 0.10 lot size, something like that, equal to a 20 or 30 pips, for example, okay? So this is how you're going to calculate that. So your targets are super important. I'm going to give you another example as well. Let's move to USD30. The ranges on USD30 are nice as well. I'm not trading it a lot, but yeah, it's nice, you know, for example. So, for example, okay, we're having a level around this edge, okay, a level around this edge. Let's say you have it right here, okay. You can see price is moving from this level upside, and you can see how price was turning away from these levels. We see a couple of manipulation moves and structure change, okay. It's pretty nice, if you ask me. Right here we have that target, so you can see we having a couple of opportunities right here. After that break of structure, you can see price is turning back to this base to test this base, okay. It's always better to move to lower time frame, but I give you an example, okay. And you can see you had one opportunity right here to short, second opportunity to short right here, and your third opportunity to short right here, and you're following overall structure. And your stops, yeah, I would advise above structure, above structure, because you can wick it out easily otherwise, you know. So yeah, example, okay, example right here, for example, your stop loss and your range, you have again a 5 to 6R range right here, from that low to the left right here for your first target point, and it will touch for almost 3 times. So that is pretty accurate. So remove the bad habits of risking a lot and removing stop loss and take profits. Calculate your ranges, calculate your percentages, okay, and calculate your pips on how much you can risk on your account, okay, and be realistic. You be here to be in the long run, okay. So you want to keep your account very healthy, okay. That is what you want. And simply to say, yeah, a good risk management, money management is key, if you ask me. And I think it was important to talk a little bit about this. But yeah, the example is given here, right here. You can see how your stops are perfectly fine, and your ranges are also calculated, and you can aim for the 3, 4, 5% reward to risking a 1%, okay, 1 or 2%. Of course, it's depending on your own plan, you know. If you like to risk 2.5%, it's possible, okay, but accept the risk, but do not risk 50 or 25 or 30% of your account. Why? Because you're not going to survive in the long run. If you're having losing strike, for example, you have 3 trades in a row, that is a lose, okay, or 2 trades, and you're risking 30% of your account, that will mean you in 3 trades, it's game over. Your account is done, and the 90% is eaten up by the markets, because the markets owes you nothing. That is a thing that you have to understand. And I believe the great traders using a right risk management. Okay, super important. It's super important. Example. Let me give you another example, the last one, to give you a good insight of proper risk management. Okay. Let me see. Let me see. Let's move to the line charts and let's identify a couple of levels. Okay. So, example charts. Okay. Just super simple examples. Okay. Nothing that hard to identify or anything like that. Just simple couple retail levels to give you an idea. Moving to the lower time frames, you have calculate your ranges right here. We see a lot of manipulation within these retail levels. Okay, we combine these retail levels once again with supply and demand areas, which gives us a great and lovely and powerful insight of the market. Okay, and the market behaviors. These are simply simple retail levels that we are using right now on the screen, but within these levels there are supply and demand areas also located. Also what I teach within my education, within my masterclass course, included all the homework assignment and stuff like that. But just to give you an idea, calculate ranges. Okay, on the left you can see right here, manipulation move, price decide to turn back in the range. Retail levels have more than likely took a couple of buys within this level because price broke out. You can see it right here and stuff like that. Okay, I will talk about this in my next videos, but to come back to the risk management, super important. Check here, for example. Okay, so you enter somewhere between here. You put your stops above. And in percentage of risk, again, a percentage of risk, you can also calculate a 5, 6, 7 R within this range. I'm not saying you have to write the full move down, but you can do an easily 1 to 3 within this range. Okay, example. Okay, so that is, I hope you enjoyed this little video of risk management. I'm planning to do a couple of more videos as soon as I have some new inspiration. Once again, I'm not a YouTuber, I'm a trader, and we keep it this way. If you like to know more about my education, feel free to enroll theforexscalper.com, and you can always hit me up in the email or something like that. I wish you all a wonderful weekend. Enjoy, and we keep in touch. Much love.